Over the past few weeks on the podcast, we've been exploring the modernization of how money moves, from the payment ecosystem modernization program and the creation of Pay Inc. from BankServe as a national payments utility to the rapid growth of fintech innovators that are building on those rails. The real question is actually this: how do these structural shifts translate into everyday economic activity for millions of South Africans? That's what we're unpacking today. Welcome to the Monocle Banking Podcast, proudly curated by Monocle Solutions. Over the last couple of weeks, we've really been looking at the plumbing of South Africa's financial ecosystem. First with Marin Kundal of GoTime Bank, we spoke about the architecture of payment modernization, the move from legacy bank-centric rails towards real-time payments, open interoperability, and a national payments utility through paying. Then last week, Rachel Cowan of Ozo gave us the Fintech vantage point, how innovators are building on those rails to create faster and cheaper and more seamless digital commerce. And what both conversations made very clear is that South Africa may finally have the two ingredients that have historically been missing from payments reform: modern rails and political will. Because this year's budget was really unusually explicit. Treasury has placed the payments ecosystem modernization program at the center of financial sector reform with a very clear intention to open the system to non-banks and fintechs and new payment innovators. But infrastructure and policy are only half the story. I think the real test really is adoption. How do we use this? How do you move millions of people, many of whom still transact primarily in cash day to day, into the digital economy? And how do you do that in a country where informal economic activity is massive, incomes are irregular, and traditional bank accounts don't always fit the way that people actually live and earn? And I think one of the most fascinating answers to that question has been evolving for more than 15 years now, if you actually can believe that. FNB's e-wallet, it's something that I use certainly on a monthly basis. It was launched back in 2009, long before mobile wallets were mainstream. An e-wallet has allowed people to send money instantly to any cell phone number, even if the recipient didn't have a bank account. And it became one of South Africa's earliest and largest experiments in mobile money and financial inclusion. Now, in a world of PayShop and instant payments and open digital rails, e-wallet is evolving again. FNB has integrated the platform with WhatsApp, allowing users to create and operate a wallet directly through the messaging app. So today's conversation is really about a fascinating intersection. What happens when legacy banking innovation meets modern payment infrastructure? And joining me to unpack that is Hema, Morar, who's executive head of FNB eWallet. Hema, welcome to the Monocle Banking Podcast. That was a rather long introduction, but we really have been focusing a lot over the last 3 weeks on payments. So just to contextualize all of that for you, talk to me about this long arc of eWallet. I mean, I had to do a double take when I looked that it was actually launched back in 2009. It really does. It makes it one of the earliest mobile money innovations in the country. If you look back at that moment, what problem was FNB really trying to solve?
Hi, Michael. Good morning, and thanks for having me. We were trying to, at that stage, say, how is it easy for customers to be able to send money across to different parts of the country and have an easy means for them to be able to withdraw it and get access to it. And as you said, it served us well for many, many years. If you speak to most people in the market, they will have an e-wallet story for you around how it's managed to help them and save them and just made their lives so much easier over time.
And when you look back at that, did the bank anticipate just how important cell phone-based money transfer would become in a country like South Africa?
I'm not sure, given that I wasn't there at the time, but I can say that over the years, our penetration into, for example, USSD and the activity we see on USSD, customers being able to buy airtime, for instance, over time with other products outside of e-wallet, we've enabled customers to take up small loans. We can see the comforts that customers have in these different channels and just how much it's helped grow and enable and create access for individuals on these platforms.
Sure, I'm not suggesting that you were there at the time. Sorry, Hema, if that was the implication, but clearly you are fully aware of the culture inside the organization. That was under
Absolutely.
Michael Jordan, the previous CEO, that
Yeah.
happened. And surely that is passed down from one generation to the next inside the bank. So it is very much part of, I'm sure, where legacy banks must have believed things were going. What has it revealed? I mean, maybe let's talk about why wallets mattered before instant payments. Before PayShop, before modern instant rails, e-wallet effectively created its own mechanism for sending money instantly to a cell phone number. What did that reveal about how South Africans actually move money compared to how banks traditionally designed those payment systems?
So traditionally, we would have expected a customer to be able to walk into a branch and open a bank account and then access in that manner. What we are seeing is that we have a large population of customers that have access to bank accounts. I think the accessibility has improved tremendously over the years. However, what we're seeing is that there's still a large portion that are underbanked, that are underserved, that are not actually utilizing these services. So, for a customer to be able to easily receive money, walk to an ATM and withdraw it, really helps to just bring them a bit closer into that fold. However, it was one piece of what we saw. And over time, we've understood that customers' needs are changing. They see, for example, customers receive very irregular income and they have limited savings. This irregular income, if I, for example, am a seasonal worker, I'd open a bank account, I'd use it maybe for a month or two, and I then won't have any regular deposits thereafter. And unfortunately, that account would eventually become inactive and close
Mm.
before I'm able to get regular income again. So we find that the structure of how traditional bank account would work, particularly in the lower end of the market, quite restrictive and difficult for customers to be able to actually access fully.
And it's such an important insight then to say, well, how do we then design rails and financial solutions to move money in a way that is far more contextually relevant for the informal economy and for parts of the economy that really shape the evolution of e-wallets, and discovering that people's financial lives are far more fluid and irregular than traditional banking models assumed must have really informed the evolution now into WhatsApp as a banking channel. So talk to me about this, because it essentially turns a messaging platform into a banking interface. Why was
Mm.
WhatsApp the right channel for this next phase of e-wallet?
We spent a lot of time researching where our customers at, what is working for them, what's not working for them. As I said, there's probably about 84% of customers that actually have a formal bank account that's not properly being used. But what we also found is that we have probably around 90% penetration of smartphone usage in the country, and then a very high proportion of that using WhatsApp. So most of the customers that we were looking at to solve for in this space, we found did use WhatsApp. So we needed to then find a way to say, how do we bring what is most beneficial to these customers and meets their needs closely into a platform that's going to be comfortable and easy for them to use. So we do
Mm.
understand customers use USSD, but WhatsApp then proved to us to say this is an easy way for us to get customers to interact.
And also to meet customers where they already are digitally, as you're saying, rather than asking them to download or navigate another
Mm.
banking app or something that may be a bit more complex to them. It's obviously about lowering barriers to entry into banking. What do you see as the biggest structural barriers preventing people from entering the formal financial system?
I think there's a lot around the comfort of the knowledge that if I put money into this account and I then send money to someone else, they are actually going to get that money. How long is it going to take for them to get that money? And how easy is it for them to be able to extract that money? The key is safety,
Mm.
speed, and accessibility. So I think those are the key things that customers would worry about.
That said, though, and it's an interesting point that you raise, because the success of e-wallet has also relied on building trust, that once I send someone, the instruction to go and withdraw that money from an ATM, they've
Mm.
got to be able to trust that I can actually go to the nearest ATM and do that. There's also the cost of travel to the ATM. And often I've heard it said that some of the structural barriers preventing people from getting a bank account is, well, they can't afford the cost to travel to the branches.
Mm.
But if you can travel to an ATM, surely you can travel to a branch. So I mean, is that the real case in the market today? Or is it 100% more about trust in the formal banking system? And hopefully products like this can start to improve that
Mm.
trust.
I think you're absolutely right. So one of the key considerations we had was distance to branches, distance to ATMs, and the cost associated with it. So, being able to do some of these transactions in the safety of your home and without having to travel and pay for the transportation is really important. So, one of the key things we've enabled is for customers to be able to go to a retail store to be able to withdraw money as well. So, it's not only at FNB ATMs. So, we've managed to enable that at Pick and Pay, Checkers, USave, PEP, and Ackermans as well, together with some of the fuel retailers. So we're really hoping that customers do adopt that as well, apart from the payment methods we've created, because that's just going to create far more convenience for them.
And how have you managed to do that while keeping the costs down, going through a partnership model?
The person withdrawing the cash would not pay for the withdrawal at all. So similar to our current approach where if I have to send an e-wallet, the recipient wouldn't pay for the withdrawal. We've kept the withdrawal at the grocer exactly the same. So the person sending the wallet usually helps for us to fund some of the costs associated with managing the networks, etc.
And I want to come back to that point that you made, referencing, what was it, 80% of income being spent within the first 5 days of the month. I think that really is fascinating. And it obviously
Mm,
highlights this deeper structural shift in South Africa's economy towards more irregular, more informal income streams, kind of as and when, piece jobs, that kind of thing. Do you
mm.
think traditional monthly bank account models are just simply misaligned with how people now earn money? And how might this also inform the way banks respond to trying to provide solutions that start to bank more of the so-called unbanked?
I think that there are solutions similar to FMB's other solutions where we have tried to solve for this market and have tried to create accessibility. So I think those solutions are there. I think getting the customer to understand exactly how those work, what needs to be done in order for the customer to be able to access credit, etc., sometimes is not quite straightforward. And where we aimed at for the WhatsApp wallet solution is really in, as you're saying, that irregular income, more informal space, which is why when we created the credit product that's attached to this wallet, we try to say, how do we change how we would traditionally look at granting credit to customers? We're utilizing a lot of data points that we can then put together to be able to then lend to customers in a microcredit environment where they can repay us quickly over the month to get them to the next paycheck.
That new cash advance feature, that's what, 50 to 500 Rand. Very interesting. So the e-wallet effectively becoming almost like a financial identity layer where that transaction behavior can eventually inform access to more formal credit.
Absolutely. And we thought quite carefully about how we create the product with the idea that we can build the customer over time so that they are then in a position to take more formal credit at a later point. And this will just help to create further data points for them when they want to take up bigger loans, more formal example, maybe vehicle finance in time, maybe small housing finance, etc.
And what does that typical journey look like? Would it be wallet, transactional account, credit history, and then access to more formal lending? And maybe just share a little bit more background about some of the technology that would underpin the credit scoring that goes into turning effectively what is a previously thin file customer into a thick file customer.
So we are starting at this point from 50 to 500 Rand to grow customers to understand them. The idea would be that over time, that customer will grow into a more formal account. That being said, the iteration that we went live with last week is an iteration. And the idea for us is to be able to learn over time and grow customers. So we do have quite a long roadmap in terms of other solutions that we will deploy to the market, where we will be able to then from a credit perspective, help customers more. Speaking to what we are using to help customers take up a cash advance product, we're using various alternate forms of data, AI, partnerships that we have in place for us to be able to just get as much information as possible from the customer to be able to then grant them the smaller amount, understand their behavior, and then offer them a larger amount over time.
Now, interoperability, I think, is one of the big themes of payments modernization program, ensuring that payments work seamlessly across institutions and platforms. How important has interoperability been for a product like e-wallet and moving onto a platform like WhatsApp?
Us creating a product that was interoperable is paramount. It was so important for us to be able to say not only can an FMB customer be able to send a wallet, but somebody who has this account is then able to send a wallet to someone else. They are then able to receive funds from anywhere and they're able to pay anywhere. So creating that broader ecosystem for the customer to be able to then fully participate was super important. We also looking forward to the changes that will happen through SAB and Pay Inc. in order to grow the PayShop network, and that we believe will really expand what we have on our e-wallet offering and give customers far more accessibility in terms of how they pay at merchants, spaza shops, friends, etc.
I think merchant acceptance that you just touched on is absolutely critical because it's one of the persistent challenges in South Africa, I think, is merchant acceptance. If the roadside vendor or the car wash only accepts cash,
Mm.
the entire digital payments ecosystem stalls effectively. How do you see e-wallet helping bridge that merchant acceptance gap?
So with our solution at the moment, the fact that anybody can create an e-wallet really helps. So if you are a merchant, you can create your own e-wallet and then you can have anyone pay into your wallet. So they can send money from an FMB e-wallet, or they can do a PayShop or EFT from any other form of account. So we think that's really going to help. And then over time, as PayShop creates the QR accessibility, we think that's also going to make it far easier. But we built the product we have in mind of the merchant sitting on the side of the road selling potatoes and tomatoes and thinking about how do we make it easier for that person.
Yeah, my experience recently was coming back from Kruger where I used e-wallet to purchase some fresh produce on the side of the road. And it's seamless, it's largely accepted, it's trusted, and it's just amazing to see how it bridges that more formal and informal economy so effectively. So I think it has been a well-proven product. Now, over the last decade or so, we've seen fintechs like Ozo building powerful payment solutions, mostly outside the traditional banking structures. So do you see fintechs primarily as competitors or collaborators in this ecosystem?
Definitely both. I think that the changes that are happening in the payment ecosystem will mean that fintechs are competitors at the moment and they will continue to be competitors to FMB. But at the same time, we open to new technologies and new ways of doing things. So we definitely are of the view that we would happily partner where it means that we are able to create products, services that are closer to helping customers and just meeting their needs.
Well, with that, with open payment rails and real time infrastructure emerging, some people are arguing that payments are becoming infrastructure rather than maybe a profit center. Do banks need to rethink how they create value in a world where the cost of moving money is trending towards zero?
I think so, absolutely. I think when we created the wallet product and we thought about the economics of it and what we charge for, etc., we definitely had to take that into account to say, how do we create something that's as cheap as possible for customers, so accessible to customers, yet at the same time, we obviously have costs that we need to cover. So we definitely aware of different entrants into the market, how they are charging for services, and what that means in terms of our customers choosing us or our competitors.
Yeah, that's going to lead to the ultimate prize, which is financial inclusion, isn't it? Because the promise
Absolutely.
of all of this is to ensure that we get more people formally in participating in the economy. So you can lend to them, you can offer credit, cash flow solutions to merchants. From FNB's perspective, what does success therefore actually look like for you in building out not just this evolution of e-wallet, but more broadly building out the digital payments ecosystem that the bank
Mm.
is so central in building?
I think if we can get, as I mentioned earlier, underbanked, underserved customers to actually utilize these rails that we've put down and have the confidence to do that. I think there's a lot that exists in this space, but having the confidence to be able to open your WhatsApp, feeling secure about it, making a payment to your granny or your child, knowing they're going to get the money, they can withdraw the money easily, make other payments, just creating this ecosystem where customers feel the safety and security of it, and then actually making a difference in the space. There's, I think, key in us thinking about how we wanted to solve for this was to say, we're not just creating another product. It may sound not necessarily speaking from a bank, but we really wanted to say, how do we actually make a difference in the country? How do we actually leave a legacy and not just create something that the customers in the lower end of the market are just not going to understand, not going to use, and it's just not for them.
And being able to do that in an environment where you are still banks and heavily regulated, and we just got off the FATF grey list, and you need to be able to report, transaction flows and how money moves. How difficult has it been to solve for this while also keeping all of the checks and balances and fraud and AML and all of that in place to ensure that this doesn't become an exploited loophole?
I think we've asked the teams to be creative in how they've tried to solve for this. We do have limits on the account. A customer can hold up to 14,000 Rand a month, and there's restrictions on payments. So, for example, you can spend 3,000 Rand a day or up to almost 25,000 Rand a month. We do need to meet all our regular AML requirements, etc. But we are hoping through the monitoring we put in place, we will be able to meet our commitments and at the same time be able to serve this market.
Hema Morar, thank you so much, Executive Head of FNB Wallet, for sharing a little bit more insight into the evolution of the e-wallet, which is now moving onto the WhatsApp platform as part of this broader payments modernization discussion that we've been having on the Monocle Banking Podcast. Great pleasure having you on the show. Take care.
Thanks, Mike.
Well, over the past 3 weeks on this podcast, we've been tracing what may turn out to be one of the most consequential shifts in South Africa's financial system in decades. First, with Marin Kundal of GoTime Bank, we explored the architecture, the move towards a modern open payments infrastructure through paying, and the broader payments ecosystem modernization program, the idea that payments should no longer be controlled by a handful of institutions, but should function more like shared economic infrastructure. Then, with Rachel Cowan of Ozo, we looked at the innovator layer, how fintechs are building new checkout experiences and real-time payment tools and digital commerce platforms on top of those rails. And today, with Hema Morar from FNB, we've seen how those structural shifts meet reality on the ground, where millions of South Africans still operate in the informal economy and where tools like e-wallet can become the bridge between cash and digital finance. You put those three perspectives together and you get a picture that starts to emerge of modern payments that are not just about speed or not just about access or interoperability and competition. If South Africa gets this right, with modern rails, with open participation, and products that reflect how people actually live and earn, then payments stop being a barrier to economic activity and they actually start becoming a real engine of inclusion and growth. Because in the end, payments are not just plumbing. They are the circulatory system of the economy, and when circulation improves, the entire organism begins to grow. You've been listening to the Monocle Banking Podcast, as always curated by Monocle Solutions. Don't forget to like, subscribe and share if you found this interesting. Look forward to catching up with you same time, same place next week.